Well, for more on the economic front, let's pivot now and bring in Yahoo Finance's Emily McCormick, who's keeping an eye on shifting pandemic-era trends. Emily, what do you got on this?
Well, Brad, as you mentioned, two big trends that we saw take off in between 2020 and the end of last year are now unwinding. Now, those are the demand pull forwards that we saw both in goods spending for the U.S. consumer and secondly for tech. And I'll point out that these reversals were first cited by Bank of America in a new note. But I'll start off first with that trend reversal on goods spending. Of course, during the pandemic, we really saw this shift where U.S. consumers were spending much more on goods rather than services. That, of course, made sense because they were sheltering in place and couldn't go out to restaurants or in-person events. But that pendulum has now definitely begun to swing in the opposite direction. And we're seeing services spending really pick back up at the expense of some goods spending. Now, I say at the expense because with inflation where it is right now, there are some trade-offs that are happening in consumers' budgets. And this is pretty apparent in the most recent economic data. You can see here the latest March retail sales report from the Commerce Department showed that the sales of some big ticket goods items were down on a year-over-year basis. Motor vehicle dealer and part sales were down by 1.2%, for instance, and electronic and appliance store sales were down almost 10% over last year. So a big reversal from what we saw in 2021, where many of these categories were actually higher compared to what we saw during the prior year. But again, going back to that pickup in services, bar and restaurant sales were up 19% over last year. And I'll point out as well that even in yesterday's ISM manufacturing survey, we saw activity in the goods producing sector decelerate to the slowest in 20 months. And what economists have been saying is that this is now reflecting moderation in demand for these goods as opposed to renewed supply chain constraints. And then I'll pivot quickly over to that trend number two that we're seeing reverse, and that's on tech demand. Now, the earnings that we've been seeing come out over the past few weeks from names like Netflix, Amazon, etc., these are really showing that the pandemic did in fact pull forward demand at the expense of future growth for many of these names. And we're seeing that fallout occur right now. When we think about Netflix and what they reported, its first subscriber decline in about a decade. Amazon's online sales unit posting its biggest year-over-year sales drop since it first reported the metric in 2016. So all of this is to say, guys, that again, these trends and this demand from the past 2 years that many investors had hoped would be sustainable to some degree really are now starting to unwind, guys.